Hello investors and traders, and welcome to the weekly market report. I'm Magee, Monte, and this is a one-year daily candle chart of the Russell 2000 ETF, ticker symbol IWM. As I zoom in here, you'll see that I left my lines on the chart from last week's forecast, and back here you can see that diagonal line moving lower. That was the forecast from last week. And if you're brand new to this market report, understand that I keep those lines up there so we could check to see how the forecast worked out. And there's a lot going on this chart. Don't be fooled. This is a stale green light down here. This is a long stretch of green candles. We did have a higher volume day today on IWM. We did hit that target of 171.77. Yesterday it was questionable as to whether or not we were going to hit that. Today, right there on the 24th of June, we hit that, and you can see that if you look down to the bottom right of that data box, I said that we most likely hit that by June 27th. So we've done that. Now I'm going to erase all of these lines here and start with a clean slate, because as I mentioned, we have a lot going on here with this chart. Now, again, if you're brand new, understand that I put out a trading checklist for our members. And for the members that are listening in, if you haven't grabbed that yet, it's on the member page. It's a checklist that follows the technical signals. I start off looking at the type of candle, what kind of volume we're looking at, the divergence from the moving average. I look for gaps. I look at the oscillators down here, the stochastics and the CCI. And if I go through this checklist, you'll see that the type of candle today is a big green candle, and the volume is supporting that candle. If I magnify that candle, you'll see that there's hardly any shadow on the upper part of that candle, which tells us that the market closed with buyers in force. Now, looking above the market, we have a gap all the way up here. And while I think that would be a far stretch to think that we're going to hit that next week, I do believe that next week we're going to try to move up, at least to get up over this moving average and to possibly fill this gap here. If you follow my gap fill rules, you'll know that 80% of the time gaps do fill. And then after they fill, we have a tendency to pull back. So the market right here is caught between gaps. There's two open gaps above the market still here. But look, again, as I magnify that, look what happened today. IWM gapped up today. So that's going to be something interesting to keep an eye on, because we eventually will most likely hit that gap on the downside. Now, down below, again, we have the stochastics just recently crossed with a buy signal. The CCI crossed with a buy signal 3 days ago. But as I magnify that, you'll see that that blue line, which is the CCI, is about to cross over that momentum line. And if you look back in history and see the times that that's happened where it crossed above, you can see that we did rally up quite nicely. Here's another one. It crossed above briefly, and it rallied for 2 days after that. Here it crossed above back here, and it rallied for about 5 days after that. So I think that we could see a repeat of that should we open up on Monday with a crossover that momentum line. So that's IWM. Again, I'll repeat this target right there for next week. I do believe that we're going to see a high up around 179.23, 179.23, and then I think we'll start to see some red candles and a possible pullback. So that's IWM. If I take a look at DIA, you see the targets were hit here as well. By the way, this is the fourth week in a row that we've hit targets precisely on all markets. So we have 100% on this week as well. You can see last week I drew this diagonal line moving up with my inline target right there at 305.05. We hit that yesterday, and then again we gapped up on the diamond. So I'm going to erase this right now, again keeping the slate nice and clean. I think we will most likely move up to fill the gap on the diamonds up here, and I'm going to go one step further. I think we're going to move up, but I think we're going to pull right back down to the 20-period moving average. So keep an eye on this pivot point, right? Remember, last week I showed a diagram following Dow theory and the phases of a bull market and a bear market. We could see a little bit of a rally. Again, if you look at that, this is what I showed you, and I believe that we are right here. We're in phase one we could see this bounce. I don't think it's going to be as dramatic as what we see here. In other words, I don't think we're going to see a 50% retracement of what we have experienced already since the beginning of the year. But I do think we're going to see a little bit of a bounce. And then I think we're going to start to see lower highs, followed by, guess what, lower lows. So be prepared. There's a lot going on. A couple of weeks ago, I mentioned, thanks to Gino, one of our traders, I mentioned the strike that they were trying to avoid in Long Beach and California at the terminals there. That could put a real hurting on our supply chain. And today, guess what? CNBC just reported on it. So they're a little late to the party on that one, but you heard it here first. And we're going to keep scrubbing the news, hunting for that news to see if there's anything that will help us determine which way the markets are going to go. So that is the Dow, DIA. Upside target right there of 321.97, and I'm doing a two-parter. I think we'll pull back to 317.98. Now let's take a look at the Qs. This is the tech sector. QQQ follows the NASDAQ market. We are, again, a hair away from filling this gap. I think we will see that. So again, I'm going to erase all these lines, draw my gap fill target price right there, just a horizontal line right from the gap fill. I think we're going to move up, touch that, and then reverse from that point. Keep an eye on the volume. Look down below. We have 5 green candles in a row, slightly higher volume today. But if on Monday we come in with lower volume, even if it's a green candle, then you start to watch out below. Remember, the momentum crossing down here on the CCI gives us about 2 to 4 days of upside momentum. We might only get up to this level by Tuesday. That's June 28th right there ends, and then the second part of this is June 30th on the way down. So again, keep your stops in place. Option traders are in good position. Our option traders that receive our trade alerts are getting some good put spreads on. They're working that. They're capturing profit from time decay. It's looking really good for the option traders. And yesterday we took a long position in one of the energy stocks, and that's looking good as well. I'm not going to go too far into energy because I want to stay on the major markets, but the energy sector is oversold thanks to the Russell 2000 doing a rebalancing. That's another bit of information that was brought to my attention immediately when it hit from Mike, another one of our traders. We have a great community of folks, then we stay connected, we share information, we look at the charts, we follow the targets. And, you know, that's what we have at Market Rebellion. It's just a great family of people that we come together and we're helping each other. So for the Qs, I think we're going to see up and down, again, possibly in the same week. So keep an eye on that. Now, if you look at SPY, and I'm going to go to the VIX, SPY did a massive rally today. It blew through our target area. Yesterday, we hit that target of 374.91, but again, we gapped up. See that? Now, there's a gap above the market still up here on SPY. I think we can fill that, actually. I think we could go all the way up there, and then we'll probably pull back, but I'm going to put a conservative upside target right there at 399.49. Then we'll have to keep an eye on the volume. I'm not going to put a two-part forecast on that just yet, because S&P trading 500 stock versus the Dow, which is 30, and then you got the Russell 2000, trading 2000, tracking 2000. This could go up a little bit more than the rest of the markets. We'll have to see. But look, we got a cross on that momentum line from the CCI. See that? 2 to 4 more days to the upside. So again, my target price there on the angle of that zip line, as I call it, is June 29th. Now, I'm going to repeat this because I like to teach through repetition. If you look at the angle that I drew here on that zip line, it follows the angle that we saw back here and very close to the angle back here. So this angle is duplicating, and all I did was carry that on over to the recent price action and then extend that out a little bit because of the oscillators down here. I mean, this isn't rocket science, but it does take a lot of practice and repetition and learning the candles and what they do. And with a little practice, you'll get right there with us and be able to make the calls for yourself on individual stocks or ETFs or even currencies for that matter, for those crypto traders out there. That's SPY. Taking a look at the VIX, this is ticker symbol VIX. This is the volatility index on the CBOE. For the most part, it's inversely related to SPY. And you'll notice that we put that downside target right there at 29.59. Now, while I think the VIX could go a little bit lower, I don't want to erase all my lines because I have some long-term targets that I want to stay in place, especially to the upside of 41.88. But I will erase these two most recent forecasts, and I'm going to draw another horizontal line, but I'm going to do that down at this roll reversal right here. See that? That slight little resistance, if it was broken just a couple days after that, and this roll reversal tends to repeat over and over. That former resistance, see this little inverted V here, was broken, and that will turn to support. So I do think that the VIX has a little bit more downside to go, and I'll put a target on there for you. I think keeping that angle in place right there. Downside target of 26.01 by the end of this month, June 30th. And then I think we're going to bounce on the VIX. So I'm going to do a two-parter here. I think we could go right back up to the moving average. Look, we have 1, 2, 3, 4, 5, 6 red candles in a row. That's a stale red light, and we're long overdue for a green candle. Right, so that's our market report for this week. Again, thank you so much. I'm going to shout out to the folks that watch the market report on the Market Guys page. Some people say, hey, they're copying you over there. No, that's my original YouTube page. But I have not been responding to the comments on that page. I've been responding to questions and comments on the Market Rebellion page. So it's the same exact report. So if you're over there at the Market Guys watching that report, you might want to subscribe to the Market Rebellion page as well. Click on the notification bell, and I'm going to try to answer as many questions as I can. Thank you for all the questions, the comments, because you're helping to drive this report in through the algorithms, and it's getting on the menu. We had record views last week, and it's still going up. In fact, what I would tell you to do, go back, especially if you're brand new to this weekly market report, go back and listen to the last 2 market reports so you can see how I drew those forecast lines and how it worked in succession, hitting one after the next after the next. And then, again, through the repetition, you'll be able to pick up on those signals and do it yourself, just like what we do on the trading checklist here. Again, you'll look at the candle, you'll look to see if the volume is supporting that candle. Right now, everything is looking bullish on the short term for almost all the major markets with the exception of the VIX. And this is what we're going on. It's not my opinion. We're looking at technical signals and we're drawing our conclusions from what we're seeing on the charts. It's really that simple. So again, please like it, share it, subscribe to it, comment, and we'll see you next week. Take care. Bye-bye.
Hello, John Najarian here. If you want to trade like a rebel, if you want to party like a rebel, well, you got to come to Rebelcon 2022. It's going to be in Dallas, Texas, at the fabulous Four Seasons Resort. We start the 21st of September, go until September 24th. It will be more fun and more live trading than we've ever done before. That's why it's called Rebelcon 2022. We're going to have barbecues and double the amount of live trading. So if you want to book that now, make sure you do, because the guest speakers, as soon as we announce those, this thing's going to be sold out. It's going to be something you do not want to miss. Limited to 250 people. Diamond, platinum, and gold packages are selling out. Sign up now for Rebelcon 2022 at the Four Seasons in Dallas, Texas.
Welcome to the Rebellion.